Are you a passive real estate investor who's interested in commercial real estate and trying to decide between ground-up developments or value-add deals? If you've bought or invested in real estate before, you probably heard about both of these strategies, but you may not know which strategy is a better way to grow your passive income, the pros and cons, some of the risks and benefits. So in this video, I'm going to talk about ground-up development, what that is, and also I'll talk about existing value-add deals and show you the process of investing in each and the timeline, explain to you which one I prefer. My name is Michael Blanc, and how people become financially free with real estate. Let's do this. All right, so ground-up development is exactly what it is. There's a piece of dirt that's being developed, and now you're building a new property from scratch, typically an apartment building of some sort. And here are the issues I have with ground-up constructions. First of all the profits come after the completion and the sale 2, 3, 4 years down the road, and there's really no cash flow until that is completed. Now, I do see the fact that the returns are higher, right? Because it's a little more speculative, the overall returns of the project tend to be higher than existing value-add deal. But the thing that gets me is that there's no money coming in right now. And so you're very dependent on the future market conditions. So there's a high risk of market downturns. We saw that in 2008, for example, a lot of projects were coming out of the ground and really struggled in 2008, and a lot of people went into bankruptcy. And we saw it again here recently. You're about to see it here as some of these projects, as the interest rates started going up and construction is typically floating rate debt, they never recover from that as well. So there's a very large market risk, and you don't have the cash flow really to ride it out. So this really requires a successful completion and sale at the forecasted prices. And there's very little room for error nor control because you're 2, 3, 4 years down the road, and you really can't gauge exactly what that's going to be like. So for me, the time horizon is too long, and that adds to the uncertainty and risk. I'd like to have a little more control over the investment. And so to me, going into value-add solutions is better because you're buying existing property that's already cash flowing. Okay, now it's not cash flowing as much as it could be or should be, but you're going into something that's cash flowing, and now you're building up that cash flow by renovating the units, making the property look nicer, and then slowly increasing the rents. So, and then what happens is we also, on an existing multifamily deal, we have certain projections. Like, for example, we want to say, okay, we want to sell in 5 years. The difference is, though, we already have a plan B built into it, because if I can't sell in 5 years, like we have recently, it's like, oh no, we can't sell right now. It doesn't make any sense. Prices are down. We need to ride this thing out, and we can't because it's already cash flowing, right? And so I can say, okay, the worst that'll happen is that we simply won't sell in 5 years, and we'll sell in year 6 or year 7. But with ground-up development, right, you don't really have anything coming in. You don't really have a model. Now, what a lot of developers have been forced to do is one of two things: either sell at a major discount until they get out of it, or they convert it into a buy and hold property right now. And so they start putting tenants in there. But that's not really their business model, and a lot of developers struggle with that because they don't really want to do that. They're not really set up to do that. So for us, value-add deal existing cash flow allows us to ride that out. For me, that reduces the risk. Generating cash flow from day one reduces risks. Improvements are made on something that's already there, reduces risk. With ground-up development, there's even a risk of not getting the zoning or the permitting, things going on outside of my control. And again, there's less market risk because I can cash flow from day one. So to me, ground-up development is probably a more advanced strategy. So you'd have to know a lot about ground-up development, how to underwrite those deals, understand those market forecasts and new completions and absorptions and that kind of stuff. So to me, if I want something that I can understand and I can understand the projections, I would put my money passively in existing multifamily deals all day long. So if you're interested in learning more about passive investing in multifamily real estate, then check us out at nighthawkequity.com. We have a lot of free downloads and content to just educate you about this amazing asset class of multifamily investments. But also, if you're a little bit more serious, you're actually looking for opportunities right now, then go ahead to our website and actually book a call. We'd love to get to know you a little bit more, have a conversation, see what you're looking for, and see if we can and help you achieve your financial goals. Here's a financial freedom. Catch you next time.